This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Starting a new week, we are coming to you live as always from the CNBC TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Sonia and Nigel. And, as we come back into a new week, it feels like we've kind of put a lot of stuff behind us, right? I mean, there's G20 which has happened, there's the US Open which has happened, there's the India-Pakistan match.
Yeah.
So,
a lot of events outside the market. And there's Jawan, which had an opening weekend as well. No.
Nigel watched it.
I did watch it.
How was it?
I mean, I personally enjoyed it.
Is it more because you're a Shah Rukh Khan fan?
No, not really. Yeah, because I was clearly disappointed with Pathan, but Jawan lived up for me.
Really?
And I went to Gaiety Galaxy to watch it. So you have those, the audience that goes in there, they're doing their dance, they're whistling. Oh, man.
I think that would have been fun, right?
That would be fun. And after years, I've gone and seen a film at Gaiety Galaxy in Bandra. So excellent. I enjoyed it personally. And the box office, well, that's evidence, right?
It speaks for itself.
Absolutely.
Yeah.
You know, I did the next best thing. Guess what I watched? Not the full thing, but I watched half of the movie. Bazigar. I was too tired. I couldn't
Going
step
back
out.
into the past?
Well,
Are we having 1990s again?
Yeah, I mean, I told you about Junoon, right? 91, 92 movie. I mean, it's like amazing times, the 90s.
But I think the markets are also quite Jawan, right? I mean, given that it's almost at 20,000 and we're just, less than 200 points away from there.
I mean, we're aiming sights for 20,000 now, and I think it's coming. So let's just quickly actually run you through exactly that in terms of what you need to know as we start another trading session here this morning. So you got, the first thing, which is the broader markets, which are starting to exhibit characteristics which are kind of reminiscent of periods of a little bit of euphoria, right? So we've got the pace of gains in the broader market, which have picked up sharply. I made this point after market hours on Friday as well, and that would hold true this morning as well. From weekly gains of 2%, and I'm talking about not stock, but index gains, mid-cap and small caps, we were doing 2% every week. We've done 4% for the last 2 weeks in a row, right? So the pace of gains itself is accelerating quite a bit. So, for example, both the mid-cap index and the small-cap indices have gained 8% in 2 weeks flat. Now, that is quite something by any yardstick. So, to add to that point, if you take a look at if you go even below, right, mid-caps, small-caps, micro-caps, in the last 24 weeks, the Nifty micro-cap index has had one lower week, 1 out of 24. That kind of tells you what's happening in the broader market space, really. I'll come to Nifty in just a bit, but just a quick, a cursory look at Wall Street, but not very much really because you had a flattish kind of day on Friday, so mildly higher. The S&P was up about 0.14%. The two problem points, which is oil prices and the dollar index, are still high. But as we said on Friday, on Thursday, there is a thick coating of Teflon here as far as the Indian market is concerned. And so far, I mean, it's not really bothered us, right? I mean, oil is now near 91. Dollar index is still above the 105 odd mark. I mean, just around there. So we'll need to see how much more. By the way, at least the sell side, brokers, etc., are starting to acknowledge the fact that oil is at 90 and, stress test sensitivity in terms of the current account deficit and things like that. But at least it's starting to come into the conversation here on a macro market level. Now, let's just come to levels here. The Nifty momentum continued. Remember, on Thursday, we took out 19,700. Friday, we closed above 19,800. So the momentum, and 19,700 was the critical resistance. Once that got taken out, the momentum picked up on the upside. We ended 0.5% higher, above 19,800. There's nothing between now and all-time highs, which is 19,992. And, of course, then the 20,000 odd level or so. By the way, there is visibility beyond 20,000. Actually, 20,300 or so is a completion level, which the market should target in this leg up. We'll see. Bank Nifty crossed the 61.8% retracement of the August to same retracement, right, which one we've been putting out on the Nifty as well. But it could not close above it. That level is 45,312. So, one would still watch, which is 150 points away because the gains fizzled out in the last 60 minutes. But above 45,312 on the Nifty Bank as well, I would say, you start to at least have the possibility of a move to all-time highs, new highs. On the way down, 44,658 can be used as a support, which is the 38% retracement of this entire fall, July to August fall, which we've been highlighting. The implied open will come up on your screen, but, as we've found out, actually, it was different. Friday was different because we started in a certain way and then actually gains picked up, unlike the previous couple of days when the implied open was lower, the start was lower, and then things picked up. So maybe, we are getting to that point where some of this stuff is going to start getting chased as well. So that's what we are looking at. 19,922 on the GIFT Nifty is the implied open this morning. Sonia.
Oh, absolutely. And it is mission 20,000, right? And the Nifty that the market is looking at. And we're not too far away from that. It's just a matter of time. We were making this point last week as well as to how, despite all the bad news thrown at the market has built on to its gains. It's clearly been a buy on dips market through it all. And that's the strategy even today. Nifty is less than 200 points from that 52-week high. We've been gaining for 6 straight sessions now. It's a 2-month high. But even if you look at, the flow situation, there is plenty to be bullish about, especially on the FI side. Now, FI selling has come down substantially in the last 3 days. On Friday, of course, there was just 200 crores of selling. But in the last 3 days, if you look at it, the selling has dwindled from 3,200 crores on September 6th to about 700 crores and now 200 crores. So FI selling has reduced, which is very positive. DI buying has also picked up quite a bit. So overall, in the month of September so far, we've seen about 6,000 crores of buying from DIIs. They bought about 1,150 crores in the cash markets on Friday as well. Now, there are a lot of data points to watch out for, and it's crucial in the run-up to the US Fed event on the 19th and 20th of September. You have a lot of data points that will come through. Tomorrow, you have the Apple launch, so all eyes will be on that. The iPhone 15 could be launched tomorrow, so all eyes will be on that. But then there's the US CPI data, there's retail sales, there's PPI, there's the University of Michigan Consumer Sentiment Survey. So all of these data points will be crucial in the run-up to the US Fed policy. In terms of macro data points, you also have in the Indian markets, the August CPI, July IIP and August WPI data that comes through. The only headwind for our market, which has not dampened spirits just yet, is that Brent crude continues to remain at 9-month highs. It crossed $90 a barrel. There are a lot of supply pressures as well. So, that's the only thing on the sidelines that the market has not taken cognizance to just yet. But I'm also watching out for the Bank Nifty very closely because the next leg of the run-up is led by the banks. So banks have started to come back in a big way, whether it's HDFC Bank, ICICI Bank. So that perhaps could be where the action lies.
Well, indeed, Sonia. And the Nifty Bank for the last 2 sessions has outperformed the Nifty. Yes. That's not happened, in a very long time. So you just look at the last 2 days. That's when the Nifty Bank has come back to the party. Now, in Friday's trading session, 2 factors played out. One, the net institutional number was a positive number. All of the past week, it was a negative number. Maybe there is some large trades in there, but that turned positive. Point number one. Point number two is you had both the Nifty and the Nifty Bank, they went up, and you had open interest that was lower, telling you there was some clear signs of some short covering that played out. And the FI as well, they added mild long positions and they covered some shorts. That's what takes long positioning now to around 58%. And as we've been mentioning, we haven't seen this sort of long positioning for the last couple of months. On the option side, well, it was pretty much even Stevens. If you're looking at the index options on the buy side, or even if you're looking at the writing side, around 3 lakh contracts were written on both sides out there. Which brings us to the strikes. 19,800 put, 19,700 put. Both of them, between them, they added close to around 60 lakh shares odd. And that 19,800 put, the premium's around 75 rupees. So you deduct 75 from around that 19,800 odd level. And your near-term, stop loss comes in at around that 19,725 approximately. That's the first level of support. If that breaks, then you're looking a little bit deeper at around the 50 DMA. Similar is the case with the Nifty Bank, which has been outperforming for just 2 sessions, which is very, very good news because that's what the one that could lead from here on. And that's what's happened in the last 2 sessions. You had big open interest build up at around the 45,000 put, which, by the way, was a bit of a resistance level. And now, in fact, given that the premium was on an average around 300 rupees over there, for those writers, well, the support comes in at around 44,700 odd. That will be an important support level. On the way, you have the 50 DMA, which it was, flirting with for the last few sessions, but managed to conquer that level. GIFT Nifty suggests a green start. I think you'll get a bit of an intraday dip. You look to get in. You need to stay long on the index. Mission 2000, well, that's the one that the bulls will be looking at. And maybe in the next few days, Sonia, we hit it.
You mean 20,000?
20,000, sorry. What did I say?
2,000.
20,000, sorry. 20,000 is the one that we're looking at.
Okay, well, it's a big move, right? The market, back to that psychological level. So lots to watch out for today. Very quickly, let's kickstart the show. We kickstart with a lot of opinion that has come through, both on the equities as well as on the bond market. Let me tell you what's lined up in the first half hour. Updates from the market across the globe. Abhilash Narayan, Standard Chartered Bank, will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV18's list of top 10 stocks for the day. At 8:30 a.m., we'll do a fundamental stock analysis with Prakash Diwan. On the equities front, we start off with a view coming in from Sanjay Mukim of JP Morgan, who says that higher oil, lower rainfall are a few macro concerns on the margin. He says while the Indian economy should be able to withstand a $90 per barrel oil print, continued crude increases combined with weaker rainfall could start to weigh on the local equity markets. He says they've already argued for a shift from growth to value, and he adds that tightening macro conditions support a reduction in beta in Indian equity portfolios as well.
Well, Sunil Kaul of Goldman Sachs thinks that Indian equities could stay resilient this time despite recent rally in oil given manageable current account, which are supported by strong services exports, remittances, robust forex reserves and resilient growth backdrop, he says, across sectors. Defensives like staples and IT in India have outperformed during past oil rallies, while property, industrials, transportation have fared the worst.
Let's also get a quick macro call from Indranil Sengupta of CLSA. He says the El Nino has pulled the seasonal rainfall deficit down to 89% of the average drought level. He says this cannot but hurt the autumn kharif crop and push back rural recovery. He adds troubles will mount if the summer 2024 Rabi crop is also impacted. Indranil says a trigger will likely be the northern rivers that water the wheat belt, slipping to say 90% of average from 98% now. He sees August inflation at 7% tomorrow versus 7.4% in July.
Okay, well, let's get you some money market views as well. On the rupee, we have B. Prasanna of ICICI Bank saying that the dollar favored by exceptionalism of US against other major economies remained on strong footing despite signs of slowdown. Asian currencies led by Chinese yuan were under pressure from weak economic recovery in China and policy divergence with the US. The rupee faced headwinds from rising crude and strong dollar environment, but is protected by the Reserve Bank of India intervention and remained range-bound around $83 a barrel, 83 rupees to a dollar. He expects the rupee to trade between 82.8 to 83.4 to a dollar range, with RBI smoothing the volatility.
All right, and on the bonds, B. Prasanna says global yields inched higher post-consolidation as incoming economy data is increasingly pointing towards a soft landing scenario. He says local yields had additional pressure from rising commodity prices and tight systemic liquidity. Overall, he expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.2%.